Hey there, my name is Ken. In this video, we're gonna talk about investing in tech stocks. You learn what type of companies are counted as tech stock, the best ones, and how to analyze tech stocks. So trade the like button and invest in subscription to the channel and let's go. You're also welcome to support the channel. All the links are down in the description. The technology sector is vast, comprising gadget makers, software developers, wireless providers, streaming services, semiconductor companies, and cloud computing providers, to name a few. Any company that sells a product or service heavily infused with technology likely belongs to the tech sector. So here's a quick breakdown of the differences. There are hardware companies and software companies. Hardware companies, these design and build services such as personal computers, smartphones, fitness trackers, smart speakers, enterprise equipment like servers and networking gear. When software companies, these companies design the software that runs on hardware such as operating systems, databases, cybersecurity software, or productivity software. Software companies are increasingly moving to a software as a service model where customers buy a subscription to a program instead of a one-time license. This generates recurring revenue for the software company. Powering all that hardware are semiconductor chips. Semiconductor companies design and manufacture central processing units, as well as graphics processing units, memory chips, and a wide variety of other chips that find their way into today's devices. Telecom companies that provide wireless services are part of the tech sector. So are the video streaming companies that provide easy access to high-quality content, and so are the cloud computing providers that power those streaming services. Many of the most valuable companies in the world are technology companies. Here are some of the most dominant and impressive tech stocks. Probably you all know them. The first one is Amazon. Amazon is the leading online retailer and the leading provider of cloud computing infrastructure. Founder and CEO Jeff Bezos will step down as chief executive later this year, opening up a new chapter for the company. Next one is Microsoft. Microsoft is a dominant software company known for its Windows PC operating system and office productivity software. Microsoft is also the second largest provider of cloud infrastructure behind Amazon. Next on the list is Apple. Apple makes the iPhone, the iPad, and Mac computers. Intense customer loyalty ensures plenty of repeat customers, and a growing array of services makes Apple's ecosystem sticky. Another tech stock on the list is Intel. Intel is one of the largest semiconductor companies in the world. Intel designs and manufactures CPUs for PCs and servers, as well as specialty chips for uses such as artificial intelligence. Next tech company is Netflix. This is the top dog in the video streaming industry, spending billions of dollars each year on content to keep its ever-growing subscriber base hooked. And you all know Facebook. Facebook is the largest social media company with more than 2 billion daily active users across Facebook, Instagram, Messenger, and WhatsApp. And here comes Alphabet, which is the parent company of online search giant Google and the popular Android operating system for smartphones. Facebook, Amazon, Apple, Netflix, and Alphabet are sometimes grouped together as the FAANG stocks. These companies dominate their industries, and their stocks have produced impressive returns over the past few years. So for now, we talked about what are the tech stocks and some of the examples of the best tech stocks. Now let's talk about how to analyze these tech stocks. For mature tech companies that produce profits, the price-to-earnings ratio is a useful metric. Divide stock price by per share earnings and you get a multiple that tells you how highly the market values the company's current earnings. The higher the multiple, the more value the market is placing on future earnings growth. Many tech companies aren't profitable, so the price-to-earnings ratio can't evaluate them. Revenue growth matters more for these younger companies. If you are investing in something unproven, you want to make sure it has solid growth prospects. For unprofitable tech companies, it's also important that the bottom line be moving from losses toward profits. As a company grows, it should become more efficient, especially when it comes to the sales and marketing spending necessary to close deals. If it's not, or if spending is growing as a percentage of revenue, that could indicate something is wrong. Ultimately, a good tech stock is one that trades at a reasonable valuation given its growth prospect. Accurately figuring out those growth prospects is the hard part. If you expect earnings to skyrocket in the coming years, paying a premium for the stock can make sense. But if you are wrong about those growth prospects, your investment may not work out. So, investing in an exchange-traded fund that focuses on tech stocks is one way to avoid making mistakes. For example, the ARK Innovation ETF is one option, although the fund's bets on high-flying tech stocks may ultimately prove riskier than investing in the tech giants listed above. Investing in tech stocks can be risky, but you can reduce your risk by investing only when you feel confident their growth prospects justify their valuations. So let me know in the comments what tech stocks have you got in your portfolio. I'll be happy to know about it. Here are more other videos about personal finance and investments for you. Make sure to subscribe to the channel, smash the like button and hit the notification bell. See you in the next video.